Good morning. Good morning. We are live. Welcome to the pre-market rundown for what is it, April 10th, 2023. Excited to be here, kick off a new week. You guys know the drill. On Monday, we have our deluxe pre-market rundown session where we're going over basically what's laid out in front of us for the week ahead. So whenever you're trying to get from point A to point B, right, or you're trying to make a trip or plan a trip, etc., you got to get a game plan together, right? Know kind of what's ahead of you along that journey, and that's what makes Mondays the deluxe pre-market rundowns, because we get into what to expect out of the week ahead, what is on our economic calendar, what data we get, any type of big data drops, any big decisions, whether the Fed is doing something, right? You want to make sure you have an idea of what's going on Monday, and that way your expectations are correctly formed for the week. Expectations are everything. If somebody says, hey, today is going to be a huge week in the market, big movement, tons of movement to take advantage of, make sure you're ready to execute, and then you come in and the market is choppy, you get destroyed, right? And what influenced you? Your expectations. So Monday is probably the most important of the pre-market rundown sessions, because that's where we go over what to expect out of the week, as well as our Monday specific news. So setting those so important expectations before we dive into the week, that's absolutely huge. So let's go back here and I'll get everything set up for today. We'll start with our week ahead newsletter, and then we can roll from there. Let's see. And of course, we had an amazing long weekend, which was just beautiful, much needed. Got to help my brother move into his new place. My brother and his girlfriend move into his new place. So that was awesome. Feeling super, super grateful this morning. Got to spend plenty of time with family, got to spend plenty of quality time with my girlfriend. So it was just a really amazing weekend. Got to, spend some time developing a trading an AI trade bot, which is on my link tree right now on Instagram. If you want to go in there and fool around with it, which is pretty amazing. That gave me tons of other ideas. So yeah, overall amazing, productive weekend where I got to spend great family time, great time relaxing, get some good sleep in. And now I feel nice, restful, and restored right after the 3-day weekend. A lot of people, are sad, oh, market's closed on Friday. Listen, take that time, recover, restore yourself, right? We had a great week, another one last week. You got to make sure that you take that time to yourself so that you can come all, ready to go and ready to execute in that next week. So let's see, make sure we got yes, we're in the correct date. All right, so diving into the week ahead. The week begins slowly with many markets across the world observing Easter Monday holiday. However, the quiet start serves as a calm before the storm, as not only key CPI and PPI prints are due in midweek, but a host of key earnings reports. So we've got a number of earnings reports here coming this week. In terms of earnings spotlight, on Monday, April 10th, which is today, we've got Tilray Brands, TLRY. That's really the only name that people might know. On Tuesday, we've got Albertsons Companies, which is like a grocery store chain. So that is, their ticker is ACI. That's one that people are aware of, right? A household name. Wednesday, April 12th, we have Rent the Runway. I don't know why that was so tough for me this morning. Rent the Runway, which I didn't know was publicly traded, but their ticker is RENT. Then on Thursday, we get Delta Airlines, right? Ticker DAL. Probably the biggest one on Thursday. And then Friday, we get United Health Group, ticker UNH, which was running last week. We get BlackRock, ticker BLK, Wells Fargo, JP Morgan, and Citi. So we get a number of big banks. Banks are always the ones that kick off earnings season, and they're doing that again this year. Or this quarter. So this is probably more important than normal, considering the fact that this is the first earnings season that we've had with, banks in turmoil like they have been. There have still been a record number of withdrawals from banks every week since this crisis kicked off. So we do know that a lot of people are moving from smaller banks to bigger banks. So that might be good news for banks like JP Morgan and Wells Fargo. But overall, we'll get some type of insight into the banking sector, which has been, the hottest talk of the town over the course of the past month, with everything going on with First Republic, Silicon Valley Bank, et cetera, et cetera. So this week, right, we'll get some spicy looks inside of the world of banks and kind of see, if these larger banks are really benefiting from kind of the turmoil of these smaller regional banks, as well as kind of just a look inside, for them to tell us, hey, this is what was wrong with those small regional banks. This is not wrong with us, right? You can put your money here. We also get CPI this week. So CPI preview, the closely watched March Consumer Price Index report is due for release. Economists expect the index to rise 0.3% from February, lowering the year-over-year inflation rate to 5.2%. In the February report, shelter, recreation, and airline fares were among the indices rising the most sharply, while used cars and trucks and medical care continued to decline following spikes in 2022. Let's see exactly when we have earnings this week. All right. Not earnings, sorry. When we have some economic data dropping. So today, nothing but wholesale inventories at 10 a.m. So if you see, kind of a little volatility at 10 a.m., that's what that is from. Tomorrow, Chicago Fed President Goolsbee speaks. So we've got a couple of Fed presidents speaking, only one during the market day. That's at 1:30 p.m. But overall, no big data. The big data comes Wednesday, right? So Wednesday is really when we're looking to see kind of the big data and the action roll out. We've got CPI data at 8:30 a.m., right? That is going to be important. And then we also have minutes of FOMC meeting on 2 p.m. So I guess we get FOMC minutes released at 2 p.m. We don't necessarily get Powell speaking or anything like that, which is very important, to note that we're not getting Powell speaking, but it looks like we are getting, notes from the Federal Reserve at 2 p.m. So Wednesday will likely be, kind of the most impactful day of the week where we get CPI data. We also get minutes from the Fed meeting, minutes just meaning notes, right? So the Fed has a meeting, people take notes, those notes are released, giving us insight into what the Fed is planning to do regarding interest rates. Are they going to continue to hike? Is it going to be, 25 basis points? Are they going to stagger the hikes, not do them every meeting, just get any type of insight that comes during the FOMC minutes. So as a result, we might end up getting some chop at the beginning of the week, kind of in anticipation of the inflation data and the Fed minutes on Wednesday, especially because we had, big movements going on Thursday, right? Big movements, which paid very nicely on our behalf. We had a number of tickers that were, kind of on the radar that moved big. We had, a number of trades that we took advantage of that moved big. So that was great in terms of, a nice fiery end to the week, a nice profitable end to the week. And now, you kind of look to say, okay, there are some things that can still move, but what you don't want to do is, again, you miss movements and then you're like, okay, like now this is when I'm going to get in and go hard, right? You want to be aware that if we don't have much going on Monday, Tuesday, and Wednesday is really when the big guns come out, then you probably want to say, okay, we'll see if the market moves a lot Monday, Tuesday, but overall we can get chopped kind of until we head into the headliner on Wednesday. Thursday, we get producer price index, right? So we get our PPI numbers. So that's pretty much like inflation, but for companies, right? So for the producers, what is inflation looking like? We also get jobless claims data at 8:30 a.m. So we get, data at 8:30 a.m. on Wednesday and on Thursday. So Wednesday, Thursday are really looking like the big days for data. Friday, U.S. retail sales. That's kind of the biggest thing at 8:30 a.m. U.S. retail sales. So Wednesday, Thursday are the big data days of this week. Make sure that you factor that into your trading plan. If you swing things into Wednesday, swing things into Thursday, realize that we get data, multiple pieces of data, both of those days before market open, right? So that's going to need to be something that you take into account here, as you develop your trading plan and figure out what you're going to swing, what you're going to hold, et cetera, et cetera. Now, I just realized too, I didn't post the link on Instagram. To be honest, you guys know the drill by now, right? Everybody here is an amazingly intelligent, functioning adult. I think you guys have followed me on Twitter, or not Twitter, on YouTube, and you know how to find this. So I think we'll be okay if we go a day without throwing this up. All right, so let's go ahead, and that looks like mostly what's important here for the week ahead. Quant ratings, CPI. Yeah, that's really most important. What we have going on here for the week ahead. So let's dive directly into Monday specific news. Now, top news, grim outlook. Well, that's what you want to see on a Monday. By the way, again, every day now during the week, I'm posting positive affirmations on my Instagram story, right? So go on, check that out, hit yes, right? Repeat that out loud. I'm just doing everything that I can to make sure that everybody's in the best headspace when they go into each and every day, right? Confessing things over yourself. Again, you don't make money during market hours, right? It's made in the preparation. Are you journaling? Are you praying? Are you working out? Do you have the time to get yourself in that headspace to do what you need to do when the opportunity rolls around, right? If you don't, you're not going to do it, right? So that's why I say the Q&As in the mornings, right? Those are the times. So if you're here for the pre-market rundowns, make sure you're there on the Instagram story, pounding yes, right, on those, morning affirmations, on those morning confessions, because again, I feel like we come into contact with so many negative things. We've got to make sure that we are plugged in and deeply rooted in positivity, right? In things that push us forward, in things where we confess positivity over ourselves, right? Execution over ourselves. So make sure you guys check that out as well. Be involved in that. I'm just trying to make it as immersive as possible to be in a good environment, because everyone says, I just don't have anyone around me who wants to do this, who has these aims, who has these goals. We do, right? So make sure that, like, I don't even really go on my personal Instagram anymore. I'm only on Adam Howland Educates. Why? Because I'm trying to close the gap between where I am and where I want to be. So what do? I follow content creation accounts. I follow people, I follow people, that are motivational, right? That are goal seeking. I follow, cutting edge technologies, right? Those are the things, because that's what I want to learn. So you want to put yourself in that environment. A lot of what we spend our time in is the digital environment. We determine our digital environment, right? So we can no longer have that excuse of there's nobody around me who has these goals, or you can create your own environment. We spend a lot of time there, right? So make sure your digital environment is one that you want to, one that makes you better, right? That's the hack with social media. It doesn't have to be, oh, social media sucks, I put a timer on my social media. No, like, I love social media because it teaches me so many different things that I did not know, right? And then I'm able to push forward. So just make sure you're curating your socials and using it as a secret weapon rather than kind of a drain on your soul and your goals, right? But here, as we get back into grim outlook for Monday, Kristalina Georgieva, managing director of the International Monetary Fund, projected global growth to remain around 3% over the next 5 years, marking the weakest medium-term growth projection since 1990 and well below the 3.8% average from the past 2 decades. Quote, with rising geopolitical tensions and still high inflation, a robust recovery remains elusive, Georgieva said in a recent speech in Washington. That's on top of the recent pressures in the banking sector that have made the global inflation fight that much more complex, she added. Dig deeper, the sub 3% growth this year is generally consistent with the 2.9% estimated in January and the 2.7% estimated in October. Advanced economies are expected to weigh the most on global growth, particularly in the US and Europe, where rising borrowing costs have hampered demand. The IMF sees some 90% of advanced economies posting a decline in their growth rate in 2023. By contrast, emerging economies are a bright spot as India and China together are expected to account for 50% of this year's global growth. Now, inflation fight. Georgieva took note of central banks' inflation fight in the wake of global banking issues, imploring them to stay the course in lowering inflation as long as financial pressures stay limited. While she implied that central banks should keep monetary policy restrictive until price stability is achieved, she urged them to, quote, address financial stability risks when they emerge through appropriate provision of liquidity. However, if turmoil in the banking system worsened, she said central banks may have to outright cut rates. This is the head of the IMF. This is her kind of opinion. This is her, outlook on things. So she's kind of like, keeping an eye on stuff, kind of the same way that Fed Chair Jerome Powell is. It's like, okay, some of this bank turmoil can help do what we were already trying to do, right? If people are scared of having money in banks and spending money, and putting money out there, then that's going to decrease demand, decrease prices, and overall decrease inflation. But it also causes instability, right? When people don't keep currency current, it crashes and it collapses. So it's a tough balancing act. But overall, right, it seems like she's kind of conveying the same thing that Powell is conveying, which is that idea of having to stay the course, right? Really making sure that, these central banks are staying strong and continuing to raise rates, or at least do what's necessary to bring inflation down unless, something crazy happens and the bank turmoil gets worse. So that's kind of, where we are overall. We expect kind of sub 3% growth this year. And it's one of those things where nobody's expecting us to see a robust recovery right now. In terms of Fed Watch, Friday's payrolls report indicated the jobs growth rate is cooling, but the unemployment rate showed a tighter labor market. Traders believe the report locks in a 25 basis point rate hike by the Federal Reserve in May. Fed funds futures are now pricing in a 67% chance of a 25 basis point increase compared with a 50% probability before the report. So that's what they mean when they say data dependent, right? As we get data on jobs, on employment, which is one of the big eight, right? There are eight in the chat for the big eight. The big eight are the eight factors that are influencing how markets are moving, right? If you hear any news related to the big eight, you need to factor that into your expectations and into your trading plan. Well, we got news on one of them, right, which is employment. We got news on employment on, what was that, Friday, indicating the jobs growth rate is cooling, which is good in terms of like bullish sentiment for markets. You want to see more people unemployed, and the jobs growth rate, the rate at which jobs are increasing, also go down, because that means the Fed can start, focusing also on the jobs market and maybe not increasing interest rates as much, right? So that ends up being bullish for markets. In terms of seeking alpha commentary, Mott Capital Management, leader of investment group Reading the Markets, said the jobs data eliminated the odds of a rate cut in June. So some people are super bullish. They're like, listen, now there's going to be no rate cut in June, right? We might get one in May, but it's going to be 25, and then in June we're going to get nothing. So, quote, the data that the Fed is focused on, such as jobs and inflation data, does not support the Fed's rate hiking cycle being over or for rate cuts. Oh, so eliminates the odds of a rate cut. My bad. Still in that, kind of still waking up from the morning here, even though I did get my workout in ready to go. But it looks like that eliminates odds of a rate cut. So that is actually bearish, right? He's saying that there's no way that rates are going to get cut in June, because the jobs data and the inflation data is kind of pointing toward the fact that we need to keep that up, keep the increases up. Then another quote, on the other hand, survey data supports the Fed is done with rate hikes and suggests a substantial economic slowdown is occurring. So we'll see, right? Again, it's one of those things where you file that under everyone has an opinion. All we're going to do is trust the charts, right? You default to controlling what you can control. That's trusting the charts, executing when it's time to execute, right? We don't have to get out here and become like, world-class economists, because even world-class economists kind of stink at their job, right? Which is what we found out. Overall, we pay attention to the charts, and there is like so much comfort in that, because it eliminates all the things that you think you have to do. Well, Adam, I don't know what the Fed is going to do, and I don't know what the banks are going to do, and I don't know this. You don't have to know. You don't have to know that at all, right? Wipe that out of your slate of worry. You don't have to know that at all. Pay attention to the charts, execute based off of what the charts tell you, and that's it, right? And you're going to win more often than you lose. It's as simple as that. But it's very nice not having all of those things on your plate, because you can't control that. So there's no reason to worry about it. Now, in terms of consumer news here, antitrust concerns. Senator Elizabeth Warren, Democrat from Massachusetts, and 3 Democrat lawmakers request that the U.S. Department of Justice investigate Warner Bros. Discovery merger over alleged anti-competitive behavior. A year after it was completed, quote, antitrust laws seek to promote consumer choice, product variety, and industry innovation. Warren, along with Joaquin Castro, David Cicilline, and Pramila Jayapal, wrote in a letter to the DOJ on Friday. Accordingly, if a consummated merger results in dramatically less available content and discourages innovation, the merger should be reassessed. The representatives claim the Warner Bros. Discovery deal has reduced consumer choice and harmed workers and affected labor markets. The company was created a year ago when Discovery combined with AT&T's Warner Media unit. Seeking Alpha contributor Eric Sprague believes Warner Bros. Discovery stock is reasonably valued. WBD has right-sized content investments after recognizing that not all content should be treated equally. Forward-looking investors should tune in for the April 12th press event that will showcase the new product offering for streaming. I mean, I don't really see an issue with that, considering the fact that they're consolidating literally just in order to survive. I mean, when you have Netflix and Hulu and Disney Plus and, Apple TV Plus and Amazon, video, right? You've got all of these, like they are consolidating in order to stay alive. So I don't think they're the ones that antitrust needs to be going after, right? The antitrust bloodhounds. At the end of the day, Warner Bros. Discovery is literally trying to hang on to like the randomest bits of entertainment in order to stay relevant. So I don't really see that as being an issue. But again, it's not really my opinion that anyone is concerned with, right? Except for the people here. So I mean, at the end of the day, they've got their own reasons for trying to go after Warner Bros. Discovery. Maybe they, have people kind of native to their area, like maybe local TV stations or something like that, that this merger negatively affects, and that's why they're doing it. But at the end of the day, it's kind of just like, man, Warner Bros. And Discovery, like they merged in order to just stay alive. So I don't think they're the ones you need to be going after with antitrust concerns. But they know that they can't break up Amazon or any of the rest of them. So maybe that's why they go after a vulnerable, straggler like Warner Bros. Discovery to try and get an easy notch in the belt, when it comes to them being tough on tech, right? Now, let's see here. Banking crisis was added. Oh, okay. Please identify the big eight. I'm missing one. Okay, awesome. That's what I love. Thank you, Vivian. You're on top of it. Yeah, everybody in here within this community helping each other, right? That's the big benefit of being in this community, that we all have each other's backs and we're all looking to accomplish the same goals, right? Now, in terms of consumer news, Mega Pack Factory. So Tesla plans to build a new factory in Shanghai to produce its Mega Pack large-scale energy unit. The electric vehicle maker made the announcement at a signing ceremony for the project in Shanghai yesterday. The new factory will be able to produce 10,000 megapacks a year. Tesla CEO Elon Musk tweeted that the new Shanghai factory will supplement output of the Megapack plant in California. Construction on the new Shanghai factory is expected to start in the third quarter, and production will begin in the second quarter of 2024. Now, the factory will be the automaker's second in Shanghai, as it already has a facility where it manufactures its EVs. Tesla cut prices on all U.S. models late Thursday again. The prices of the Model 3 and Model Y were trimmed by at least $1,000, while prices of the Model S and Model X were cut by $5,000 or more. So Tesla really bringing down the prices there. Citi believes Tesla's price cuts will put even greater emphasis on its gross margins for Q1. Daniel Sarita, investing group leader of Beyond the Wall Investing, thinks Tesla's latest delivery numbers show overproduction problems, and demand side will likely get weaker in the foreseeable future. So for any of my Tesla maxis that are, worried about Tesla earnings or rolling up into it, kind of what the situation will be, it's probably important to take this stuff into account here. Tesla continuing to cut, prices, and that's probably because it's sounding like they have made too many Teslas. So it looks like they're trying to solve that problem. We'll see kind of how that affects, their Q1 earnings numbers, right? There might be an overproduction, right? A glut of Tesla vehicles, and that shows up on the balance sheet. We'll have to see. Now, in terms of healthcare news here, dissent over legality. The battle over the abortion pill is likely headed to the U.S. Supreme Court after two federal judges on Friday offered differing opinions in the legality of the drug. First, Texas-based U.S. District Judge Matthew Kazmarek on Friday suspended the Food and Drug Administration's approval of mifepristone. His decision is essentially an injunction preventing sales of the drug, while a case before him brought by anti-abortion groups on the approval of the drug continues. However, a matter of hours after the Texas ruling, Washington State District Judge Thomas Rice ruled that the FDA needs to continue the status quo with respect to access to mifepristone. Kaczmarek gave the Biden administration a week to appeal the decision during which the suspension will be delayed. In his rule, Kaczmarek said the FDA has made legal errors in its approval. Mifepristone, approved in 2000, also goes by the brand name Mifeprex. So we've got, battles over legality of abortion pills. What else is new, right? This kind of just continues to be in the news, probably will continue to be in the news. So, we'll see what happens with that. But overall, kind of seems like, not news that is directly affecting publicly traded companies right now. In terms of today's markets, looks like a mixed bag across the board. A lot of markets are closed again because it is the day after, Easter. So in terms of today's markets in Asia, Japan, we're up 0.4%. Hong Kong is closed. China down 0.4%. India flat. London closed. Paris closed. Frankfurt closed. The Dow up 0.1%. S&P flat. NASDAQ down 0.1%. Crude oil up 0.1%. Gold down 0.5%. Bitcoin up 1.6%. Back above 28K. What else is happening? ExxonMobil, ticker XOM, holds informal talks with Pioneer Natural, ticker PXD, on potential mega deal. So maybe ExxonMobil is looking to acquire Pioneer National. Typically, again, whenever two companies are looking, at doing a deal, a merger and acquisition deal, the one that's being acquired, their stock goes up. So in this case, you're looking to see maybe PXD go up and XOM go down if that merger goes through. As of right now, though, it's just talks. But you can still see some positive sentiment on the side of PXD. Aramco, ticker ARMCO, maintains crude supply to Asian refiners despite production cut. Tech, ticker TECK, reiterates benefits of planned split, gets entrepreneur Lasande's backing. Ahead of Biden visit, Sunak says more work needed to restore Northern Ireland government. Premier Cancer Research event AACR kicks off this week. Here's what to expect. Apple, ticker AAPL, slips as IDC says Mac shipments fell 40% amid PC weakness. Emirates Telecom to pick up 50% stake in Uber's Careem for $400 million. Baidu, ticker BIDU, sues Apple app developers over bogus Ernie bot apps. Tupperware brands, TUP, stock tumbles on delivering or delisting risk. Advisor engagement, and then Netflix scores streaming eyeballs with You, Chris Rock, and also the Chris Rock comedy special. I have watched You. I have not watched the Chris Rock comedy special, but also, like I said, I'm trying to put more and more stuff in my eyeballs that can make me money, as well as close the gap between where I am and where I want to be. So to be honest, more of my eyeballs have been on kind of social media, YouTube, and just like learning, growing, right? Which is the goal as always. But we're through it, right? We're through it. We got through another session here for April 10th, 2023. We've got a brand new set of opportunities to close the gap between where we are, where we aspire to be, where we are, where we're meant to be, where we are, where we're destined to be. Make sure that you are taking advantage of each of those opportunities, right? It doesn't have to be ground shaking, right? World changing progress, 1% every day. That is the goal. That's what you're trying to accomplish. And that's what we're going to do each and every day this week. So as always, if you got even one valuable morsel of information, just show love to these accounts, right? I got to get more consistent with posting the YouTube shorts. I kind of forget about YouTube sometimes, but got to, show love to the YouTube shorts, right? Like them, comment on them. I appreciate it. If you say, hey, Adam, I love that you get on here and you tell me what I need to worry about for markets every day for free. All I need you to do is get those thumbs working, right? That's all I ask in return on the Instagram posts, right? Even if you go through Instagram right now, Adam Holland Educates, like, comment on the post, some emojis, anything, right? That helps me out as I continue to grow and we continue to expand this community. We get more trained eyes, finding more opportunities for us to take advantage of, right? That helps all of us. So I don't just have you guys come here as, people looking with your hands out, right? This is a community where we are all looking to achieve things together. It's all of us putting our hands to the plow, right? So that's what I ask in return, right? I don't make this a paid subscription thing. I could, I don't, right? So, just make sure that you're showing love in exchange for the love that I show, and we can all continue to grow, continue to kill it out there in markets. Had a great week last week, looking to do the exact same thing this week, but at the same time, remaining patient, right? Not forcing anything, taking what the market gives us and making it happen with that. So if you appreciate this session, drop a 7 in the chat, right? If you plan to kill it this week, drop a 7 in the chat. If you plan to make money this week, drop a 7 in the chat. Make sure that is widely declared and known, because right now, in a few minutes, we go into that bell ringing, and it ain't going to be, no rubbernecking, kind of no chicken footing around, right? You're looking to hit the ground running and make sure that you're ready for any opportunities that rear their head. So everybody have a great week. I appreciate you. Shout out to you for investing in yourself, and I'll see you back here tomorrow morning for our next pre-market rundown. Have a good one.